fighting for my life on this trade. Stock markets are lower here. Had some interesting headline things. First of all, Walmart reported good numbers. That's a good thing, by the way. Walmart is a really good pulse check on the consumer. So with Walmart's stock numbers, we'll take a look at Walmart in a second. That's actually really arguably one of the bigger important news events of this week is Walmart's earnings. So U.S. Stock futures, however, lower today off of what we saw happening in Eastern Europe. Little bit of uncertainty. What we basically see, escalating tensions between Russia and Ukraine, dented risk appetite globally with investors rushing to safe haven assets. You'll notice that gold is up today, right? You got dollar yen down, people rushing for the Japanese yen. VIX is up. And we can take a look at this and we can, sort of base this around this section right here. Putin lowered the threshold for a nuclear strike in response to a broader range of conventional attacks. And Moscow said Ukraine had struck deep inside Russia with US-made missiles. Ukraine launched an attack on Russian Bryansk, is that correct? Region overnight with 6 US-made long-range missiles, Russian news agencies reported on Tuesday, citing the Russian Defense Ministry. So, little bit of geopolitics this morning. Uncertainty happening in the Eastern European theater. We see stocks down here this morning, not massively down, but down nonetheless. And notably gold up here, actually breaking through that resistance level that we marked yesterday on our charts. This is the thing about shorting gold, and I don't have a short position on gold, and I want to reiterate that. I am not actively shorting gold, but watching it. The tricky thing about shorting gold is that any time geopolitics can sort of bolster the price of gold dramatically, right? So if you get some sort of geopolitical event happening in the Middle East, in China, in Taiwan and China, I meant, Ukraine, all of these different theaters at any moment can cause the price of gold to flare up. It's one of the reasons that I'm very, very selective on shorting gold, because the geopolitical risk, I'll tell you one time that really took me by surprise is I had a very bearish bias on gold during this time. And specifically, I was holding some shorts during this time on gold, and it was going really well. But then the terrible things that happened, October 7th, the attacks on civilians in Israel, sort of came out of nowhere for the market. And sure enough, gold just launched into the stratosphere. I did make some money back then, but it was much less than what was expected because gold at that moment skyrocketed off of geopolitical concerns. And it has persisted on both sides. There's been really sad things happening going on in the Middle East. And as I always mention on the channel, whenever I mention sensitive topics like this, all we can do is hope, pray, whatever you're interested in, for peace in the Middle East, as well as in, Ukraine and Russia. Very, very serious topics, but they do very much impact the financial markets and are worth mentioning. The VIX is up 9.3% here today. That is a big jump for the VIX, up to 17 here today. And what does this tell you? Well, let's look at the put-call ratio as well. So yesterday, put-call ratio for today will come out at the end of the day. But yesterday, put-call was more in territory of, people feeling optimistic, bullish, secure, safe, etc. And now today, what we're probably going to see is with the VIX jumping like this, the put-call ratio will probably start landing somewhere up in this region. Now, what does the put-call ratio tell you, and why do I pull it up so frequently? Well, it's a really important indicator to look at. It shows you the weighting, the volume of transactions in favor of puts or calls. And when this number is lower, I like to use this as a contrarian indicator. When you get a big burst in put demand, this was some of my best trades of the year right there. I got long a lot of risk assets. I'm still long Bitcoin. I'm long SMH, which is not going very well. But my point is, I do like to wait for extremes, and then extremes on the other side. When things get too optimistic, this would have been the perfect time to take profits. This would have been the perfect time to get long on stocks, Bitcoin, risk assets, right? It's not always the perfect timing, and it's not a holy grail, and nothing is. But I do love to keep an eye on the put call ratio on a frequent basis. When it gets more extreme, we call that extreme greed down here. And up here, we call this extreme fear.
This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The Stock Box, the Edge Finder, Pulver Alerts, and the VIP Discord community, as well as our Trading View indicators, are all on sale for 40% off. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more with the link being dropped in the chat now. Again, 40% won't last forever, so take advantage of this huge sale. Stock Box, Edge Finder, Pulver Alerts, VIP Discord community, and Trading View indicators, 40% off right now.
Michael has a question. He says, this question's been killing me. How do you backtest fundamental-based strategy? So fundamental analysis, backtesting is a little bit different than technicals. For me, I don't backtest fundamentals on a candlestick chart per se. Like, I don't like time entries based on fundamentals. Fundamentals are not a timing tool for me. They're a directional tool. So what I will typically do with fundamental analysis is study scenarios. For example, let's go do a quick example of a test. When inflation is trending down, like this, through history, there are many times where inflation is trending down, trending sideways, trending up. If you want to be a fundamental analyst and you want to backtest what that typically does, I can tell you what it typically does. Typically, bonds go up during this period of time. Gold goes up. Typically, stocks go up. Lowering inflation means interest rates are going to be likely lowered as well, which is less restrictive, and basically more money gets printed, and it is generally a period of time where things are strong. So we study not price charts, but historically speaking, in an environment where inflation is cooling, what typically, not always, what typically happens. You could do this study for many things. You could look at interest rates, right? You could look at the yield curve and test that. You could take a look at GDP numbers and PMI numbers and retail sales. When jobs numbers, when unemployment rate, for example, is at a certain threshold, right? When unemployment rate is under 5%, when unemployment is over 7%, when employment is over 8%, you can study windows in time in the technical chart where certain fundamentals through history apply, and then understand that. Gold actually goes down. Gold likes inflation. That is actually not true. I'll show you really quick. And I'm not trying to give you the actually comment, but over here, when in 2022, let's go look at gold's price action in 2022, where we saw the dollar screaming higher on higher than expected inflation. I know it may sound counterintuitive at first, but the dollar got very, very, very strong in 2022 because inflation in the US was going out of control and the Fed was raising interest rates to combat that inflation. Gold hates rising inflation. As curious as that sounds, and I know a lot of times you hear, well, gold's an inflation hedge. Over the very long term, yes. Over the short term, a terrible inflation hedge. Check this out. Here's 2022, right? 2022, inflation starts going crazy. Gold tanks. Gold went from 2,050 an ounce to 1,650 an ounce. The reason I show you that, the reason I discuss that is that the theory that gold loves high inflation is absolutely, it sounds correct, but it's actually wrong. Usually, high escalating inflation, as long as the economy is decently strong, like we saw in 2022, gold gets crushed because the Fed rate hikes into the inflation to combat it. And that means the dollar gets real strong as the yield on US bonds, US interest denominated things starts to get higher, right? So the dollar gets real strong. People want cash. Top Setups algorithm is one that I check each day for the trade ideas that I'm looking for. But currently, I'm just not getting enough strong setups. I could look at the Australian dollar against the Kiwi dollar. But yeah, still don't love this chart. Let's take a look at the Nikkei. Why not? Okay, the Japanese stock market might actually be something I'm curious about. I could see us going back to retest some of these levels here. I may consider that one. My SMH trade, I got to talk about this one. This one has been, I'm fighting for my life on this trade. Oh, it's actually green again, which is kind of shocking. I almost stopped out on this position. I took this trade back here. I had a whole monologue yesterday about how I didn't trail stops. I didn't do anything on my position because my rules didn't allow me to do that. I was waiting for this break to trail stops, did not get it. So I've watched this trade come all the way against me, back to break even. And I've got a stop loss down here. If this thing tanks, I'm out of the trade. If it rips here, then great. I'll start again, same rules apply. I'm looking for a move through those highs in order to trail a stop. If I can get it, wonderful. If I cannot, then it is what it is. But we're slightly green on the position, which is actually kind of shocking. Yesterday, I was down $4,500 and it looked like I was about to hit my stop. And then it reversed intraday. Russell's down 0.8%. Came down and hit support here today. I'm curious to see how the Russell does. Again, tagging support here. S&P, NAS trying to come back here a little bit from the sell-off that was pre-market. Take a look at NAS coming all the way back here. Dow Jones trying to bounce as well. S&P bouncing. Dollar yen here down 0.4% today. Pound yen, euro yen, dollar Swiss. Looks like it's finding some sell pressure. The dollar looks, in my opinion, like we may be topping out around 107 for the short run. I don't think this is the end for the dollar uptrend, but I do think we probably see some retracement. I would not be surprised if we go back and retest that 104.50 level. Should be a very healthy pullback in this upward trend. I think that would be a 61.8% retracement on this recent move. Let's do this. Yeah, so you're looking at a 61.8% retracement. If that happens, that's a very fair, healthy pullback. Because this thing has been on such a one-directional move to the upside, I think it's due for a bit more of a corrective pullback. I'm not shorting it. It's not something I would, it's not a trade I take. I don't trade the pullback, at least not, you know, if I do, I have some trading robots that will trade grids and things like that. But in terms of an active position, not something I'm really interested in taking. We had some geopolitics, some stuff going on in Eastern Europe. What do you make of it? Does it change anything for you?
I just saw, I think it was Foreign Minister Lavrov said that Russia's position is not is that nuclear war won't happen. So that's at least better than that they changed the doctrine this morning and said that if a large attack happened in Russia, then they could do nuclear. So whatever that means.
Yeah, and anytime we bring up that conversation, it's scary. It's uncertain for markets, and we saw a quick reaction. Stocks moved down lower. They are snapping back here a little bit. Gold is up this morning. Oil price is also up this morning a little bit. I don't know. It's impossible to say, what's going to happen next on the geopolitical front. It's a very, very hard thing to predict or forecast. But I don't know. Do you think, and this is just a Trump question, do you think Trump has the potential to help the situation in Russia, Ukraine specifically?
Define help. Does helping Ukraine
let's say for
making
people
them
who
give
are
a plant?
Say that again. Sorry, I cut you off.
Yeah, you did.
Sorry.
You were so rude to me. Is helping saying to Ukraine you should give up land because that's what Russia will do to stop attacking you?
Well, I think if you get into the difficulty of trying to let's just say from a simple perspective of loss of life, rather than giving up ground or getting into all that, is there the potential that there's a stop to the war, even if it means concessions one way or the other? Getting into that's a whole nother side of it. But simply the idea that war stops and that trade becomes less tight. What do you think on that?
There's a lot of ego. There's a lot of masculinity going around, and there's a lot of showing strength. And making a deal can be looked as weak, which President Putin, which President Zelensky, and President Trump is trying to avoid at all costs, it seems. So I do not think that Trump is able to, unless Putin wants. So there's three people who needs to and has to want to. So I don't think Trump can do it alone. But then again, I will be surprised. I want this thing to end. So if Trump can do it, fine. I don't think he will do it. I hope it triggers him so he does do it.
Yeah. No, I think again, despite your feelings on Trump, let's hope that there is in the next few years resolve to some things. Just simply put, from the loss of life perspective, if nothing else. So we'll see. But in terms of the market's reaction to it today, you saw gold move higher a little bit here. Oil prices higher by 0.7%. I don't know. I kind of think that oil prices, I'm hopeful that there is an improvement in that situation, and that perhaps sanctions and boycotts and tensions could be relieved, and that oil prices can actually stay down, not because of weak economy, but because of supply constraints being lifted. Do you agree on that sense in 2025? I lean that direction. I actually think and am hopeful that oil prices do continue to sort of stay muted to the downside. They may not slide way down, because then OPEC will get all up in arms about it. But I think that there's some downside for oil next year. Do you agree, or do you think oil prices actually could bottom out and go higher?
Also, there is so much to either side, and I might be wrong about this, but I saw a report this morning that said that there's going to be a lot of oversupply in the market. That production is higher than what they are reporting, so that means that price could go lower. Now, to be said and frank and everything else, we are at the same price since September. We have barely moved from 79 to 66. We are in a $30 range. Going forward, I believe so. China needs to get their things together Europe needs to get their things together. America needs to get their things together. Saudi needs to get their things together, meaning stop producing so much. Then we can have higher prices. I believe with the lack of demand, we see the inflation across the Western world and the G7 countries we trade is lack of inflation means also lack of demand for oil, and that's in my world will weaken more than has anticipated so far. So a weaker oil is kind of what I see with that.
Yeah, no, I mean, right now you brought up China. That's a really, really important point. The oil, well, we have to remember that in the global system, China's a massive exporter and manufacturer, but their economy's been really struggling the last few years. That will take some time to reverse, and it's taken some time already, right? It's been a long wait. A lot of people who have been holding their breath, trying to wait for China to reverse course and to have some stronger economic data, are still waiting. So, we'll see what happens. The stimulus out of China was a big booster to their stock market, but we've seen a lot of, and again, we're going to China because it has a big impact on oil prices, which have a big impact on everything else. So the Hang Seng Index had this ginormous jump, 36.5% gain, and then now seeing a 15% drop. I'm wondering if this is a buy or if you stand clear until there's further evidence that the Chinese stock market has bottomed. Because look at this thing. It's had a horrendous last few years. I mean, the top for the Chinese, the Hang Seng Index here, back in 2018. Meanwhile, stock markets around the world have been taking out their highs for a couple of years now, or for at least a year now.
But you also have to remind yourself, China is China with Xi Jinping, whatever that means. Everything is propped out on debt. Remember, what's it called, Evergrande or something in that direction?
Yep.
The real estate company. So it's a card called card house that it can potentially fall, where you have weak demand for their products and services. And I have one guy that I talked to in China, and he says that production is all-time for that company, all-time low. Like, it's never been worse.
Really?
The question is that for the entirety of China, or is that just one company? I don't know. But
well, you know what they say, typically when things are going really well, all boats rise in a rising tide, right? So if one company is feeling the worst ever, there's a good chance that it's shared by others in the same industry, the same sector, etc. So yeah, I mean, guys, China is a really big key factor for many markets that many of us watch closely. If you watch copper, if you watch oil, if you watch silver, gold, I mean, the Chinese economy is very, very important. Also, if you trade Australian dollars, very important to the Australian economy, because we just discussed this a moment ago, but the demand for raw materials goes up if, China, the mass manufacturer, is doing well. Australia is a commodity heavy exporter. So, the Australian dollar has some correlation to China. And you can see with the Chinese stock market popping and then dropping hard, we've seen a bit of a reversal as well in the Australian dollar. So all these markets, one way or another, are sort of connected.
Very much. And I'm just trying to find I'm supposed to do it beforehand, but I'm trying to find the oil storage numbers. But anyways, everything is connected. And in as much as somebody asked you in chat earlier today, or a bit previously, like, how do you come up with all this information? How do you see the world? And a very easy way to look at the world is to track money or exports or imports, who is trading with who, and then some math, how much of that income comes from certain sectors, goes to certain countries, so that you can see who is the biggest trading partners. And therefore, since that's the biggest trading partner, it should have the most important implication to the economy.
Yeah.
And as far as I know, the iron ore and the supply to China from Australia is about, I think it's 30% of the economy. For something to do poorly and it's 30% of the economy, it is going to impact you one way or another.
Yep, exactly. So, just another day. I mean, relatively speaking, this week is a little quiet, but then you have events like this that get thrown in, and it poses a challenge to markets. The other thing, we discussed this yesterday a little bit together, Ivan, is that before the next Fed meeting, we have a couple key events. We have, of course, the NFP report at the turn of the month, which is 2 weeks away, 2 or 3 weeks away. The jobs data is really, really, really key, and so is inflation. But here's a question for you: which one do you think matters more at this moment? Do you think it's really actually quite hard, in my opinion, to pick which one I think is more favorable, or which one is more important to the Fed? Because from the Fed official chairman Jerome Powell, he said they're evenly weighted currently. But if you had to pick one, I'll tell you mine after you tell me yours. Which one would you say? CPI or NFP? Which is more important?
PCE.
Good answer, Ivan. That's a trick question. No, that is actually a great answer. For those who may not have understood the reference, PCE is another inflation measure that the Fed has regularly claimed to be the more important metric that they look at for inflation. Everybody looks at CPI. The reason CPI gets a big move also, by the way, is because it often comes before PCE and gives us a lot of the information. So a lot of the information leaks on CPI, but then PCE is really important as well. So you'd basically say, long story short, the state of inflation you think is more important, which I would agree with that.
Yeah. You know what my actual answer?
Yeah.
Yeah, my actual answer is whatever or whichever, or if any, data point that surprises the most.
Okay.
To either direction.
Yeah.
So if we have a really low NFP or really high NFP, that's going to set the tone. Versus if you just get a slight difference in the CPI, but the large difference in the NFP, that's going to be a kicker.
Well, here's the thing too, Ivan. I think about this. Let's say jobs, right? And inflation. When you're talking about surprises, and for everybody who's listening who may be more on the news side to fundamental analysis, remember that what makes news events move a lot is not when they come out as expected, but rather when they come out surprising to what the market was thinking. Now, here's another way of thinking about this. Which one matters more? Well, think about it this. Which one would I be more nervous about surprising up or down? Well, I would actually be glad to see a surprise to the downside in inflation for risk assets, but I actually don't want to see big surprises either way in jobs. Because if you get a big slide to the downside in jobs, then people are going to be scared about the recession concerns. And if you get a huge jump in jobs, then people are going to say, well, that's going to turn into inflation because big hiring means wage growth. Wage growth means higher paid employees. Higher paid employees mean they go spend more money. Prices go up. Ta-da, inflation, right? That's at least part of the story. I think what really stokes inflation, though, is supply lines, like what we saw in COVID disruption from all the world shutting down, and as well as the 2022, massive stuff that happened from Russia and oil and everything.
Can I ask you a question?
Mm-hmm.
You have time if you're not going to kick me out anytime soon. Like you normally do. What do you mean by supply chain issues? What does it mean and how does it look like?
Yeah.
It's just a word, right? But what does it actually mean?
Yeah. So two unique examples, which we all kind of remember well. And you know these answers, Ivan, but you're doing a wonderful job at prompting for the audience. I appreciate it. If we think about this, in 2020, right, you had everything shut down. A lot of people weren't going to work. A lot of shipping stuff slowed down, especially in China, right? So you had these huge disruptions to the flow of inventory. And when there's disruptions, but people still need them, what do? Those prices get bid up. Let's say that, everybody remembers the hand sanitizer thing. Everybody wanted a bottle of hand sanitizer in 2020 because they were afraid of, they wanted to stay clean and they were afraid. So what happened to the price of hand sanitizer? Well, the price jumped up because there was only so much of it available in the supply line. That causes inflation. The other scenario, supply issues, was the Russian invasion of Ukraine, which immediately brought on a whole bunch of Western nations putting sanctions on Russia. And where does Europe and the UK get a lot of its oil from? Russia, or the natural gas, right? A ton of the energy comes from Russia. So when those supply lines get disrupted, whether it be from sanctions, whether it be from quarantine, etc., prices get bid up when simple supply and demand. So great question for the audience. I appreciate that, Ivan.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.